Good morning, legends. We have $19 billion worth of open long positions at risk of liquidation should price turn around from where it is right now. But does that mean that this was a fake move and that price is going to reject all the way back down into the 20s? Or will just a pullback liquidate a lot of those longs before a further push up? That's what we're going to talk about in today's video. I have been flooded on my social media with comments of people calling this a fake move. I'm going to explain to you why I don't think it's a fake move and that it is just so far a perfect play of the trapping volume formation that I have been banging on about on this channel for the last week or more. So just remember this, guys, when Bitcoin was in the high 20s and everyone was saying that we were going to go down to 20K, 10K, 8K, I even saw from some experts, just remember that this channel was buying. This channel, as you can see right there, that entry was 27,000, and you can also see there that that position says holding. It is still open. You need to buy when everybody is fearful. That's how you make it in this game, and you need to take your profits or sell open short positions when everybody is greedy. So we're going to get into all of that today. By the way, if you are looking for an exchange to trade on, OKX is my preferred exchange. You can grab the link in the description of this video for an up to $500 sign up bonus and also increased reduction on trading fees. You get a 15% discount with that link below. So even if you have an OKX account, if it's old, you may not be getting that higher discount on your trading fees. So it may be worth starting another account considering it's so easy to open one. It's going to save you on fees in the long run. And whilst you're down there, check out all the other links as well, because there's lots of discounts on lots of different things that you can get. You will also see the Patreon link down there. Do not join it today. It is the 31st of May. Patreon will charge you today if you were to join, and then again the 1st of the month. So to avoid a double charge, just wait until after the 1st of the month and then you can come join us. All right, now that I've got all of that out of the way, let's just have a look at a few things. Let's look at the formation first, because we really did get a typical play. Now, if you have been watching my videos, you will know what I'm about to say, or if you're brand new here, you can go back to watch in more detail. However, this formation here is a trapping volume formation where it comes from a peak formation low, which we got with this wick here, and then the market maker just holds price sideways for a long period of time and does not return to this level. The point of them doing that is to induce traders to take a position. So they kept price either under the 50 EMA or just under this range here and did not create any higher highs, and they kept it also above this area here. So they were inducing traders to open short positions with that EMA trending down and price staying under it. They were trying to get people to open shorts. Did not get enough people. By this stage here, we were still at 6 billion delta to the shorts. The market maker needed more people to go short before they could send price up. And that is exactly what this wick did, right? Now, if you understand the market maker method, however, this wick also created a W formation right there. So if you didn't take your entry off the stopping volume candle right here, or build your long positions here, if you weren't aware of this formation, then you could have taken your long position right here. Now, once you have the W formation, the next time you usually see the market maker turn up is when they need to break that 50 EMA with volume. If you have a look looking back, we had no market maker candles, no high volume green candles that broke the 50 EMA until yesterday. So whilst everyone's calling this a fake move, it's actually a very typical market maker play. We see volume when they want to stop the direction of price, which usually creates the first side of the W or the M formation, and we see volume come through to break the 50 EMA. So far this is absolutely typical and no real reason to call it a fake move, but it's also not a confirmed move. So I just want to be clear about that. Then from there, we've got our 3 hits to the upside. Also typical market maker play. Once they get past that 50 EMA, they make a run for the 200. We have wick exactly on that 200 EMA. What follows lose this is one of two things. And this, if you're looking for an entry, is what you need to look out for. And it's also why buying now would be the absolute worst thing you can do. So step one, it's very simple. We're either going to pull back from here, back to the 50 EMA, wherever that is at the time, and then bounce off it. If we get that and you get a strong bullish candle at this bounce, then that's your entry if you don't have one already. Now, it doesn't matter what price that is when it happens. All that it matters is that it stays above the 50 EMA. If it fails the 50 EMA, it's not necessarily all over. This could come back as long as it creates a higher low from this range here. It's still technically valid, but ideally we want a 50 EMA retest. That's one option that could happen, and that would be price coming back to meet the 50 EMA. The other option that could happen is that price doesn't come back to meet the 50 EMA, but instead it just goes sideways and consolidates. And whilst that happens, the EMA catches up to price. If that does happen, it's not necessarily bad, because at this point in time, all it would mean is that price is holding above this previous zone here where it got stuck many times, and it's now flipping that from the resistance level into the support level. So it's not necessarily a bad thing if we just range sideways for a few days and the EMAs catch up. As long as when the EMA does catch up, we're experiencing candles kind of like this, where we just have wicks below it, below the 50 EMA, but we don't have any full candle closes. If we start to see that, those wicks again are inducing traders to take a position in the wrong direction before the market maker actually sends price up again. So two places to watch out for. Now, because this is the 4-hour time frame, it can mean that this is days away. So patience will be required. Now, if it's days away, we want to know where is it most likely that we will get a pullback if we're only to get pullback. And usually that will happen with a news event. So let's see what's going on this week. So it doesn't look like we have anything really significant until Thursday of this week. This is Thursday midnight for Melbourne time. So you just need to convert that from wherever you are. That could cause some volatility in price. Depends on where we are before Thursday. If we're at the pullback, it might cause the pump out of. If we're not yet at the pullback, it might cause the pullback. And then we also have this non-farm employment change at 10:15 that night. And we also have a Europe bank holiday on that day as well. So you'll find that when one session is closed for a bank holiday, what typically happens in that session shifts to another session. And that is exactly what happened yesterday. So if we have a look at yesterday on the 1-hour time frame, what you hopefully know by now is that the Asia session, this session here, usually just sets the high and the low of the day and not much happens. But because we had a US holiday yesterday, what happened here was they shifted it and we got volatility during the Asian session, which started that initial breakout. And then UK seemed to do nothing, just a little bit of a pullback. And now this final push here has actually happened in the dead gap zone, which is interesting. So we may get something like that. We may get a session shift, because we usually go consolidate, run a trend, volatility, reverse the trend, or extend the trend. That's pretty much the pattern, which was shifted yesterday. So on Thursday, we may have a pattern shift as well, but I will be doing updates on that day anyway. And now the other thing too, just I wanted to point out quickly, this here says the bearish moon phase started yesterday. The way that I trade the market maker method is in combination with the moon phases. So when we're in a bearish moon phase, I basically only trade shorts, and when we're in a bullish one, I basically only trade longs. That helps me to increase my win rate. What you have to understand is that no method is perfect 100% of the time, and the moon phase method is about 80% correct, which is pretty freaking correct. Like, it's pretty good. I believe that we may be within that 20% that is not going to be correct, because this one here was the bullish moon phase. We did have this uptrend here. So you could say technically that was it playing out there, but then we just went sideways. And now the bearish moon phase has started and we're rather parabolic. So I'm just going to trade what I see. This may be one of the ones that doesn't turn out to be actually bearish. Now I'm just going to turn on the VP to see where have we created imbalances, because this was such a fast move, because that's what we're going to expect if we do retrace, that we're going to come back to fill those imbalances. So on the 1-hour time frame, what we can see here now is that these two candles here have created created an imbalance, and we had a lot of volume trading at the previous weekly high. And then these candles here have also created an imbalance down here at around the 30K level. So we would expect at some point in time, once this run is over, we would expect that at least this imbalance here is going to get filled. That may lead to the retest of the previous weekly high that I just spoke about. And then you need to reassess what happens around this area. If we fail that, then we're looking into this level here, pretty much going to be a recovery of this candle here into that high volume area, and this candle here. If we get pullbacks, this is on the 1 hour chart. So if we get pullbacks to either of those candles, we're going to fill these imbalances here, and we would then expect further upside. Now, here's the thing. I just showed you at the start of this video the $19 billion worth of long liquidations that we have currently going on, which means at some point in time, the market maker is going to come back for those long positions to wipe them out. What we want to look for on this chart is where are the biggest amount of long liquidations, because they don't need to bring price all the way back into the 20s to collect all of the leverage. They may decide to just go for the largest amounts of leverage. And as we know, retail often longs when it's way too late. And that's why we get that large increase in leverage towards the end. As you can see here, the first push took us from a negative delta to a positive delta. The second one brought us up here to 11 billion. And the third one has taken us up to 19 billion. Now, when we have a look at these levels here, these are the largest areas where longs can get liquidated if we pull back. So that lowest level there is at 30,420. But then there's also these ones down here with the lowest level being 30,100. So they may decide to come back for that. Now let's look at what that looks like when we translate it to a chart. And 30,100 is right back into this zone here. 30,400 will retest that previous weekly high. So those are going to be the two targets for a pullback, I think. Let's have a look finally at trading light and see if that's giving us any hint of where the buyers are currently waiting and also where the sellers are currently waiting. There's not really anything too significant above price that would cause a pullback. We've got this area at 32,400. And when we have a look back at high block, the short levels that are still yet to be liquidated, we've got between 32.3 and 32.6. So that could be the local top before we actually get that pullback. And then when we have a look at below current price, we've got some really big orders here. This one here at 28.6. I'm really not sure why that one is still sitting there, but I'm not really going to think we're coming all the way back to 28.6. I would say that that is skeptic. We also have this order here at 30,000. That kind of lines up with what we're looking at on the chart. And it's also a round number, which retail loves a round number. So if you're not in a trade already, you don't want to be chasing this. This very much could be towards the end of the move. What you want to be doing is waiting for a pullback. I am favoring the 30,000 kind of area, say 30,000 to about 30,200. I'm favoring that as the area for a pullback. However, I'm not going to dismiss if we hold above the previous weekly high and we can't break that may be the best that we get. So in relation to the entire trapping volume formation, so far everything is playing out perfectly, but there is one more confirmation before we can expect this to be the beginning of a longer term uptrend, and that is the retest of the 50 EMA. If we can get through Thursday's news event holding that 50 EMA, then I think we're going to be good. Now, just a quick look at the markets, because the reason for this pump is because the market's pumped and Bitcoin is literally just catching up to this. So S&P has had a nice bounce and broken this downtrend, and so has the NASDAQ. However, neither of them have a retest. So that's what we're waiting for next. If they come back to retest and then actually continue this as an uptrend, that retest for them will provide the retest that we're waiting for on Bitcoin. So keep watching these as you go, because at this point in time, and don't have a new uptrend until you have a higher high and a higher low. We are currently missing the higher low on basically everything. So can't call it until we get that higher low. And if you see it happening here on the S&P or the NASDAQ, then you're going to start paying close attention to Bitcoin. And that would then also be the time, if you get that higher low on Bitcoin, to then start looking at alts again. Let's just quickly have a look at the Bitcoin dominance. And so that dominance is shooting up to this key area here still. It's kind of slowed down a little bit, but it may make one final push just to meet these previous highs here before we actually get any sort of a rejection. So eyes on NASDAQ, eyes on S&P, eyes on the dominance. If we get pullbacks on all of those, that's when we look for Bitcoin to create its higher low. And once Bitcoin has a confirmed higher low, then it would be safe to enter altcoins. That's all I have for you today. I'll be back tomorrow to see how this thing has played out. Don't forget to hit like, subscribe, leave a comment below if you learned something in this video, share it around, and follow me on Twitter where I do updates in between these YouTube updates if anything significant happens that you should be aware of. And other than that, I will see you for tomorrow's update. Have the most amazing day.